Nigerian banks are now accepting and dispensing the old 500 and 1,000 naira notes following a directive by the Central Bank of Nigeria. However, due to the over 2 trillion naira mop-up by the apex bank, scarcity of the old notes still persists. Well, Dipo Ajayi, the head of fixed income and forex at Chapel Hill Denham, joins me to explore how banks can better ramp up currency circulation. Thank you so much for joining us on the show today, Mr. Ajayi. And really now there's some relative ease looking at the directive from the Central Bank of Nigeria in line with the Supreme Court's judgment. The weight was heavy on the pockets of Nigerian and literally their bread and their businesses. But now talking about how we can better manage the out of the currency in circulation concerns, because this really counters the initial move by the CBN to ensure that we reduce the amount of money outside of the bank's vaults.
Yeah, thank you very much. The currency policy, the redesigning of the currency is a lofty idea, but I think the problem is the implementation on the part of the apex bank. One thing is that it's so bad that they need to now backtrack on what they've done. And as we speak currently, we all know this Supreme Court judgment states that, okay, they are forced to actually introduce the old currency back to the system, which is not a bad idea. And one of the byproduct of this decision is to stem inflationary pressure, the currency security challenges in the country. And that to some extent, the policy has already been achieving some of those things, but just that I think the timeline for the implementation was actually very short. And as a result of that, that's actually impacted negatively on the people. And that's one of the things that necessitates the reason for the CBN to actually backtrack on the initial decision. And on the issue of actually maintaining the liquidity system, there's one thing that still stands. You and I still know that the maximum you can still collect is now you withdraw from your account still remain 20,000 naira, and one way or the other, that's one way. That's one way or the other that will actually help in actually reducing the level of liquidity that's actually going back into the system, and also help the rate at which liquidity is actually staying outside the banking system.
Now, Mr. Ajayi, you earlier heard the conversation I had with Olumide talking about the latest news in terms of the slash in the BTN, PTA allowances, the amount that the CBN is issuing now. Looking at the volume, this definitely reflects that there's a bigger crunch within the FX market. How is the market responding to this news as well?
Yeah, for the impact of this will actually be felt in the parallel market, because what that means is that the unmet demand in the official market will actually find its way back to the parallel market. And in no time, we'll start seeing the pressure on the parallel market again. And I think it's not a very good one at such a time like this. I understand the stand of the CBN at this particular point in time, considering the fact that you need to actually manage the liquidity very well. But at the same time, the narrative will not be so palatable in days to come, because we'll start seeing FX naira actually depreciating in the parallel market close to 800 naira. We are not very careful.
And I like the fact that you brought this into play, because how do you think this would also likely fuel that element of speculation that the CBN has always had a big wield on and try as much as possible to mute? How do you see this fueling speculation?
Well, that's why I said that the impact of that is that we see the currency that depreciated in the parallel market, because market trade based on sentiment and speculations, and knowing fully well that the central bank is not actually selling as much as what they've actually done to the bank, means that the CBN does not have a deep pocket for FX to actually meet demands again. So as a result of that, markets you now start seeing people going back to speculating on the currency, meaning that we don't have as much capacity as we've actually stated.
And in terms of your expectation for the MPC as well, are you one of those that also predict that we may likely see an upward tick in terms of the MPR rate, or you think the rate will be left unchanged? And how do you think this would influence market sentiment?
I think for me, I would rather stay on the fact that the hawkish MPC will do a 50 basis points and the dovish one will will maintain rates. And my reason is premised on the inflation figure that was released. Although we saw an uptick in inflation figure, but the level of increase, it cannot be compared to what we saw in the last month. When you look at month on month, it printed 1.71 this month compared to the 1.87 that we saw last month. So it means that the level of increase is not as aggressive as what we've been seeing in the past month. And also coupled with the fact that I think one way or the other, the scarcity of the currency actually played a good role at this particular point in time. And although we know that the current inflationary pressure is two-sided, both structural and both demand side and supply side, for us to actually get a reasonable inflation figure, it means that we also need to address the structural problems affecting inflationary pressure.